Whether you're buying, selling, renting, or already own a home, this video is going to show you the numbers that most people don't see until it's too late to do anything about them. The sale price, the down payment, the mortgage payment, those are the numbers that make headlines, dominate conversations, and fill up the mental space of anyone trying to make a housing decision. But there's a whole other layer of costs, the ones that live in the fine print, in the settlement statement, in the lease renewal nobody read carefully enough, in the maintenance bill that showed up 18 months after move-in. And most people encounter those numbers for the first time while they're already in the middle of a transaction, with no room to adjust and no one who thought to warn them. That's what this video is about. I'm going to walk you through 4 different situations: buying, selling, renting, and owning. And in each one, I'm going to show you the number behind the number, the cost after the cost, the things that tend to land as a surprise, but absolutely does not have to. Let's start with buyers. If you're getting ready to buy a home, there's a good chance you've spent a lot of mental energy on one number, the down payment. That makes sense. It's significant. It's visible. It's the thing everyone asks you about. But while all of that attention is going towards the down payment, closing costs are sitting quietly in the background, and most first-time buyers don't get a full picture of them until they're already under contract. Closing costs aren't one fee. They're a collection of them: lender origination fees, title insurance, appraisal costs, prepaid property taxes and homeowners insurance, attorney's fees depending on your state. The Consumer Financial Protection Bureau estimates these typically run between 2 and 5% of your loan amount, on top of your down payment. On a $400,000 loan, that's up to $20,000 that needs to exist somewhere in your budget. Here's the part that most people miss. You don't have to wait until you're under contract to know these numbers. When you're getting pre-approved, you can ask your lender to run real scenarios, different down payment options, different interest rates, what it looks like to use some of your cash to buy the rate down. The numbers won't be exact at that stage, but they're really close. Close enough to plan around, close enough to compare across lenders, and close enough that nothing at the closing table will feel like a surprise. Almost no one tells buyers they can ask for this before the process even starts, but they can. And the buyers who do are the ones who arrive at closing calm instead of caught off guard. And while we're talking about closing costs, some of them are negotiable. You can ask the seller to contribute toward your closing costs as part of the offer. Some sellers push back, some negotiate. Some, especially those who've been sitting on the market for a while, will surprise you. I had a transaction recently where the seller offered $10,000 in closing cost assistance right off the bat, without the buyer even asking. That seller had been on the market long enough to understand that making the deal easier to close was worth more than holding every dollar. Now let's talk about the other side of the table. If you're thinking about selling, you probably have a number in your head. The price you're hoping to get, minus the commission, equals what you're walking away with. That math makes sense on paper, but it rarely survives contact with the actual settlement statement. Transfer taxes are a frequent surprise. Prorated property taxes for the portion of the year you own the home. HOA dues through the closing date. Any seller concessions you agreed to in negotiation, which comes directly out of the proceeds before you see a dime. None of this is unusual or unexpected if you know to look for it. But sellers who haven't seen a settlement statement before find themselves quietly recalculating in the middle of a closing. And that's a disorienting place to be doing math. Before you accept any offer, ask for a seller's net sheet, an estimate of what you'll actually receive after every cost is accounted for. And ask for it run against multiple offers, because a higher offer with significant concessions baked in can net you less than the cleaner, lower offer with none. The number that matters is the bottom line, not the number at the top. Renters have their own version of the hidden math problem, and it tends to arrive in the form of a lease renewal notice. The number at the top is higher. The clock is ticking, and the default response for most renters is to either sign quickly because moving sounds exhausting, or spiral without a clear plan. Both responses tend to cost money. Here's what's worth understanding. If you've been a reliable tenant, paying on time, keeping the unit in good shape, not creating problems, you have more leverage in that renewal conversation that you've probably been told. The cost of turning over a rental unit is real. Lost rent during vacancies, cleaning, repairs, finding and screening a new tenant. A landlord who can avoid all of that by keeping you at a slightly lower rate often will. Most renters never ask. Most who ask are surprised by what's actually possible. And the rent line isn't the only thing worth looking at. Lease renewals can quietly introduce add-ons that have been part of your monthly payment without you thinking much about them. Covered or reserved parking, a premium garage spot, an upper floor unit with a view premium. These felt like reasonable upgrades when you signed. That's a real monthly number you could eliminate. If a lower floor doesn't carry a premium and the view isn't why you live there, that's money leaving your account every month for something you stopped actively choosing years ago. Renewals are a natural moment to look at everything on the bill, not just the headline number. And if the renewal math ultimately doesn't work, that's information worth acting on early. Tools like Zillow and apartments.com can give you a real-time read on the market. If the numbers favor a move, knowing that with time to plan is a very different situation than knowing it under deadline pressure. Homeowners. Finally, let's talk about what owning a home actually costs beyond the mortgage payment. The mortgage payment is the floor. It's not the ceiling. And for a lot of homeowners, especially in the first few years, the gap between what they expected to spend monthly and what they actually are spending can feel unsettling if it wasn't planned for. Maintenance and repair are a big one. The general rule of thumb is 1 to 2% of your home's value per year. On a $450,000 home, that's up to $9,000 annually. Not as a predictable bill, but as a reserve you need to be actively building, because the roof doesn't send a calendar invite. The HVAC doesn't let you know it's planning to fail during the hottest week of the summer. Homeowners who don't build this reserve face the same cost eventually, just at the worst possible time, with no financial cushion underneath them. Then there's insurance, not a fixed cost, but one that insurers reassess regularly. In markets affected by weather-related risk, premiums have increased substantially in recent years, sometimes dramatically. Property taxes can shift too, particularly after sale, when the purchase price often becomes the basis for a new assessed value. If you've been budgeting based on year one numbers and haven't revisited them, the actual picture may look meaningfully different today. And if you're in an HOA, the monthly dues are just the surface. Special assessments, reserve fund shortfalls, and fee increases can arrive with limited notice and real dollar impact. The homeowners who don't get blindsided aren't the lucky ones. They're the ones who looked at the full picture before they needed to. Every number in real estate has another number behind it. The purchase price has closing costs behind it. The sale price has a net sheet behind it. The renewal offer has add-ons and fine print behind it. The mortgage has ongoing ownership cost behind it. The people who navigate housing well aren't the ones who avoided the hard numbers. They're the ones who learned to look for them early and who had someone in their corner to help them understand what they were looking at when they found them. That's what this video is for. And if any part of what you just heard applies to your situation right now, whether you're buying, selling, renting, or just trying to get a clearer picture of what you're actually working with, I want to have that conversation with you. Reach out directly. My contact information is in the description. No pressure, no pitch, just a real conversation that helps you go in with your eyes open.